Okay, so these vertical lines indicate the US session that I trade and we trade live inside of our trading group. So let's go through a quick tutorial over last Thursday and Friday, and then we are going to get into the full analysis for today. So we can see here that at 8 o'clock in the morning, we already had price going up. So this is a very simple setup that we look for. First of all, what we want to do is we want to make sure that we are going to trade the break of that structure if it's going to happen to the downside. So that is number one. Number two is we are going to get confirmation from our aggressive SAR that we have here that was created right here at the 9:30, basically beginning of the session for the equities open. But we're not in that trade yet until we get our confirmation of this bearish engulfing candle that breaks that particular key level. At that point, it is very simple. All we did was grab our short position. We look to enter a short with our stop loss above the SAR, and we want to take this down as far as possible because we are looking at a major structure point at this level. So again, as a group, we always talk about securing at least 20 pips or ticks in futures and then allowing a runner. In this first wave, price went down a nice 135 pips. And then again, because it's 11:30, one of my steadfast rules is that we no longer take trades afterwards. So this was an easy trade to close on Thursday. Okay, then on Friday, very simple. We noticed pre-market price is dropping. Again, we are sitting on a 5-minute chart. All we need to do at that point is go ahead and set up our break of structure line. We are going to begin to get confirmation with our secret sauce, which began to happen right here on this candle. The confirmation happens here with the close, okay, right above that structure point. And then again, we just set up in this position our long position, trying to take it right back up as high as possible to structure. We set the stop loss below the SAR. And then as you can see here, we hit our profit levels. Again, we always talk about securing 20, but again, the end of the trading day would have happened by 11:30 a.m. at that point. But by then, we would have secured an easy 73 points with crude oil. Hey, the professor here, and welcome back to the Professor Trades channel. This is a special weekend, so a quick shout out to the men and women of the U.S. military. This is Memorial Day weekend, and we should never forget the sacrifices of our men and women, both past and present, who go out to serve our country to maintain and secure our freedoms in this country. So again, thank you to you, and I hope all of us can take some time to reflect this weekend and be extremely proud and grateful for that service that has been done and continues to be done in our great country. So if this is your first time on my channel, welcome. A little bit about me. I've been a college business professor for over 15 years, teaching both graduate and undergraduate students in the School of Business. And then I've also been an investor and trader for 8 years. And just like many traders, I struggled in my first 3 years before I finally got with a mentor. I got in a healthy community, and that is what allowed me to grow my first 6-figure account. And now my whole purpose is to be able to give it back, both here on YouTube, but more importantly, in the private community that I invested in to build, to have members come together and learn from all walks of life, meaning we have international traders from all over the world. And whether you're a brand new trader, a high school student getting into college with 50 bucks, right? We have both brand new traders, intermediate traders, and advanced traders. And so we're trading live in the community. We're giving resources in the community. We have an amazing member chat in the community. We have learning videos in the community. So I'm going to invite you to check out that community at some point during this video. Come on in. I'm actually offering a free trial right now. So I'm going to drop that banner down below so that you have it. So it's going to be scrolling down at the bottom for just a few minutes. Come over to theprofessortrades.com. Check out the website. Jump into our 7-day free trial that I'm offering for friends and family of current members, but I want you to take advantage of it as well. Come in for 7 days, and if you like it, you're more than welcome to stay. If you feel you don't get value, you can cancel your membership at any time. Okay, so as we normally do, we like to start on the weekly time frame to kind of see what crude oil did over the past few weeks. And of course, the biggest thing that stands out is that we have not been able to close above that $80 mark, and we have not been able to close below roughly that $76 mark. So this begins to give us our playing field to begin the week, because again, we have 3 weeks of data letting us know that this has been the roof, right? The ceiling, and this has been the floor over the past couple of weeks. So on a weekly level, we are kind of in this trending consolidative state that we are currently in when it comes to the weekly chart. So now we're just going to go ahead and flip over to the day chart, because now we begin to look at our analysis on a deeper level. And again, I invite you to watch to the end of the video, because we're going to go through the multiple time frame analysis, and then I'm going to be giving you what I think is going to be a decent entry for the 1 hour, depending on what the gaps do. And then we'll talk a little bit more about the gaps as well. So again, whenever we see these lines here on my chart, again, just a reminder that these are zones. Okay, these are never going to be a specific price point. And I like to make these zones yellow. So these are going to be the areas that we are going to work on for this particular video, because again, we trade what we see, and we have no evidence right now that price has gone above or below. So we are going to trade within this 500 point area until price tells us that it's going to close above or below this particular level. Okay, so the first thing I want to look at is I want to look at the Fibonacci on this daily time frame. Okay, so I'm going to go ahead and grab a fib level, and I'm going to go ahead and put it at this high, and I'm going to swing it down to this low, and I want to be able to see what price has done. Now we can see here that on Thursday, price rejected the 61.8. On Friday, attempted to get back up, but did not reach that level. Okay, so if we're looking at this strictly from a price action standpoint, at this point we begin to look at the candles, and the candles are telling us on the higher time frame like it's struggling right now to get up much higher. Now again, we're going to be talking about where price may open. We'll be talking about the gaps, but understand that as of right now, based on what we see, the price action is dictating a struggle to go even higher. So the original sentiment right now, looking at the daily chart, is that we could possibly see price going further down on crude oil. So as we get into the lower time frames, this is where we have the intraday opportunities, whether it's to buy or sell. So here on a quick note, we begin to look here, and we're going to go ahead and draw this trend line to see right now that we only have really 2 touches on that trend line. And as we kind of widen this gap here, we'll be able to see this a little bit better as we get going. Okay, so now we're going to drop over to the 8-hour chart. See, as you drop down, you can see here that you get a different perspective. Okay, because now on the 8-hour chart, we can take that trend line, and now guess what? We now have a confirmed 3 touches. Let me move this up a little bit. Okay, pretty close to 3 touches on that trend line. So again, just a visual for you to see that we are in this bearish channel. So we are going to need price obviously to close above this fib level, which is about the $78 mark. Okay, and again, just a reminder that I'm using the light sweet crude oil futures chart in case you want to follow along, because we do have many futures traders in our group as well. So I like to change it up. So this is the futures chart. Obviously data is off right now because the markets are closed. So we are currently in this window right in here. So this is going to be a key level for a couple of reasons. Number one is it is approaching our trend line, or if it comes back up to our trend line. Number two is we've had previous rejection here near this 50% level. So once we get a break of the trend line, a closure above, that will catapult the price to probably go back up to these levels. But until we don't get that at this level right here, we have to stay with that kind of bearish sentiment in the meantime. Now we're going to drop down to our 4-hour chart and begin to see what our 4-hour chart is showing us. Now here, when we look at the 4-hour chart, Again, this gives us the ability to grab that trend line and really get in more specific. Now I can move that trend line, and here now I do have 3 confirmed touches. I've got one there, I've got one there, and I've got the one that was already labeled at this area right in here. Okay, so this is where we in our group, this is what we dissect. And again, we have our strategy that we're using, so you can come in and learn our strategy. Very simple strategy. It only takes a couple of seconds, and you're going to know whether to buy or sell. And again, we're going to be telling you that as well inside of our charts and our daily analysis that we do inside of our trading community. So again, we're going to need that break and closure above this 78.10 area to be safe. And again, when you look here to the left, you can see here that we had these 3 wicks, so price never closed. This fake out right here probably had a lot of folks who weren't using the strategies that we're using to get trapped into longs, and then the price reversed and went back down. So you've got to always look to the left, because the left in trading is going to give you a lot of clues in what you're doing. And again, I think that is one of the strong points of being connected in a trading community, is that you can avoid some of these pitfalls, because trading is hard. Trading by yourself is even harder. That's why I invested into building this community, to bring people from all levels, and whether you're Forex, whether you're futures, to come in, right, and surround yourself with like-minded people who want to see you win, want to see you succeed. And again, this can avoid many, many years of misery, of blowing accounts, of losing accounts, because you're connected in a community who's doing the exact same thing each and every day. So on a long-term time frame, again, we have to remain bearish in this channel until we know that price is going to close above. Now, as we drop into the 1 hour, here you begin to see a little bit better, and you see how important it is to drop to the multi-time frame analysis, because this is where we begin to look for our trade setups. Okay, and again, as a community, we are trading our easy, simple trading strategy with just grabbing some horizontal lines and then getting the confirmations that we want when we want to scalp. And again, on a short, this was our buy entry. This was another buy entry. And again, we currently have that 20 pip challenge that I'm helping everyone facilitate at least 20 pips a day in the market. So that way, no matter whether you have a $10 account or a $10,000 account, you can secure each and every day in our community at least 20 pips if you're on the Forex side, or 20 ticks if you're on the future side, by using simple strategies and breakouts like this. When we share our charts, when we post our charts, when I give you the trade alert, or we're trading live once or twice a day in the app, this is what's happening. So it becomes very routine, it becomes very simple, and we're there to hold your hand and guide you the entire time. So now we are beginning to look to see on the 1 hour what price is done. And again, we have not yet had a complete, okay, when we begin to go over to the left, you can see that this area here, okay, is still kind of in this consolidation state right in here. We are not going to get a true break of the trend to either side, okay, as you look here to either side, until we get a candle to close above this area and head much higher. And I'll go ahead and turn this candle green to stay consistent, or we get candle closure down at this level, and I'll turn this candle red to keep it consistent. Until then, right, we have an established trading playing field, if you will. So if we know the playing field, now all we have to do is grab the movements within the playing field. And we had so many different trades here that were so simple for us to take. And again, this is just the consistent value over and over. And all we do is just focus on repetition. We're looking at the markets. And again, that begins easy because we like to trade structure. So even in a choppy market, as many will call them, the choppy markets we love because they're very easy to grab. 20 pips, 20 ticks, and just rinse and repeat once or twice a day, and you are done trading for the day. So on a bigger time frame, right now that we're still on the 1 hour, as we've been dropping down, we are still in this bearish channel and we need to wait for confirmation. So what I want to do now is I want to go ahead and drop over into the 15-minute chart. We're going to kind of see the same price action. I'm going to label the gap. I'm going to explain to you what the gap is, how you should trade the gap, and then we'll begin to wrap up this video for you. So again, if you're getting some value in this analysis, you can definitely go down below, hit that like button for me. And if you are brand new, subscribe and share this video with your trading community. Maybe somebody learns a little bit differently and sees an opportunity that they did not have before, and that's how you can pay it forward. So let's drop to our 15-minute chart, and here we can begin to see the price action. I'm going to go ahead and remove these verticals that became cubes as we move the chart, and this is our 15-minute price action. So where price closes, okay, price closed here on Friday when the market closed. That creates the area for the gap. Okay, and I'm going to explain the gap very slowly. I had a couple questions in the community this week about what the gap is. So let me kind of explain real quick what the gap is. So the gap is nothing more than I just showed you there on the chart where price closed on Friday. If price opens at a different price with the Sunday market open, the space between the two is considered the gap. And I'm going to show you and think about some trading psychology on how you should trade the gap. So let me go back into the chart and kind of show you this. Okay. So now, and I'm going to make this chart a lot bigger so you can see it. Okay. So that is our gap area. So if for Sunday, the price opens here, okay, we get a red candle that opens here. Okay. The difference between where price opens and where price closed on Friday is considered the gap. Okay. Now, vice versa. If, let's say, I'm going to get rid of this big arrow. Let's say that price on Sunday opens up here, and we'll make that a green candle. Then the difference between where price opens and where price closed on Friday is considered the gap. So that price in difference, the difference in price, okay, is going to be considered the actual gap. Now, the gaps do not necessarily close within a few seconds, right? If there's a gap of 1 or 2 points, it just, as soon as the market opens, it closes. But if there's a gap of 20, 30 points that's open in either direction, what we've been noticing on crude oil is that usually price will run away for a while. It could even run away overnight into the London session, into the next US trading session. So you never want to over leverage if you are going to take the gap. The gap is one of those things that if you get the gap, it's like extra sauce for the rest of your trading week, but you really got to do a strong psychology job of making sure that you realize under leverage gaps, because they could stay open for a few minutes, for a few hours, overnight, and even for a few days. On a very rare occasion, does the crude oil gap not close in more than 72 hours. Okay, in less than 5% of all the ones that I studied, it went longer than 72 hours. Now, if you're trading in the futures, you got to make sure that you're trading not an old contract, that you're trading a current contract, and you want to trade that current gap on that current contract, because old contracts, the gaps do not need to close on the future side. So if price runs away when the market opens, right, one of our general rules is we do not take a crude oil gap trade unless it's 50 points or higher. It's really not worth it if it's 15 or 20 points to maybe be in drawdown for 50, 60, 100 points, right? So we let price run away to come to our targeted areas. Same thing here. If price opens and runs away, we let it run away for at least the first hour of trading when the market opens to see if we can get that 50, 60, 70 point gap. And then that's where we execute our strategy of first lot size is our smallest lot size, a quarter lot size of what you normally would trade. And then we wait to see if price returns and closes the gap within a few hours or during the overnight session. And then if it goes up, same thing, that price comes back. So everything eventually leads back to price closing the gap. But again, I just want to, reiterate again and again that gaps can stay open for hours or for days. So you want to make sure that this is a position, A, that your account can handle a little bit of drawdown, B, that you follow the rules, 50 points or more. If not, it's not worth trading the gap, in my opinion, for crude oil. And C is that you manage your trade, meaning we've had a lot of gaps stay open for 24 hours, and we took a second and third position at the same quarter lot size. Okay, maybe on futures you drop down to your minis or your micros, and you drop down to those lot sizes, and then you add 1 or 2 positions every 30-40 point gap after the original 50. And now when price turns around to close the gap, you actually are more profitable with less stress, less margin usage, because you traded smaller, but because you stacked position. Again, this is something that we teach you inside of our group, and this is something that we, again, walk you through with, or I'll send a trade alert. Hey, I'm getting into position number 2 for this particular trade. And again, everybody knows what we are talking about. So that is how you trade the gap. So we are going to need to wait, obviously, for the market open to see what happens here. But we've gone over in this particular video where and what the gap is so that you can look out for it as well. Okay, so as I mentioned earlier, I wanted to give you a setup in case you get this scenario. So let's go back into the chart, and using the exact same strategy that we use. A couple of things are, we are sitting on the 15-minute chart. So I'm going to grab a Fibonacci level, and I'm going to go from this high down to this swing low. And you can see here that we've crested above the 61.8. Okay, we are sitting at a level here, a Fibonacci level, which also acts as support and resistance. And then we have the trend line that we have been talking about here during the course of this video. So what we are going to do is set you up for a possible sell situation based on that exact same structure point that we talked about before. So if we just go here and we're sitting on a 5-minute chart, once this structure is broken, okay, and that price point is 77.46 on this chart, this is something that you can look for. Let me grab a short position. There we go. For price to enter at this level here, taking it back up, because what's going to happen is that our number one tool that we like to use to the flip side has already shown flip to the top side. So keeping that in mind, the goal here is to take this back down to at least the lowest level, which is all the way back here. Now, again, this is going to be preempted by what may happen with the gap on Sunday, because if the gap does open down in this level, then it would have already hit the entry, but you're not going to be able to obviously set this sell stop prior to the market open on your broker, I would assume, unless you have the ability to set up a trade before the markets open. But again, with everything that we do in this group, we always talk about our 20 pip challenge. We want to make sure that if you are looking at a trade setup like this, you always want to secure your first 20 pips or 20 ticks. So it is crucial that you have a strategy. And it's one of the things that we talk about and we do, about having maybe 2 entries where you lower the lot size, right? Let's say, for example, you were going to trade a normal CL contract in futures, right? You would drop down to the micros and you would enter, maybe 3 micros and 3 micros. So you have a 6. You cash one out at 20 ticks and you let the other one run and you protect it as it's moving. Same thing on the Forex side. Let's say you traditionally trade a $5 lot size. Well, you drop down to a $2.50 lot size times 2. You enter, you secure one at 20 pips, and you let the other one run. Make sure that you protect it along the way. So again, these are all the things that we're talking about, showing folks how you can actually trade with less stress, have multiple entries, and still make more money at the end of the week than you can by stretching yourself out. Because the hardest part about trading is trading psychology. It's not hitting buy or sell, right? It's going to do, what do you do before you get in the trade? Do you have a plan for that? And then what do you do when you're in the trade? And how do you know when you should exit the trade on both winning trades and possible losing trades? And I sent out a poll yesterday in my community inside of YouTube. And again, that came out as what most people said, hey, this is what I need help with. So I'm going to be creating some trading psychology videos as well to help you on the other side of the screen there just get better at what you do, because trading can become very routine and very simple. It's just harder when you do it by yourself. But the trading psychology piece, and there's a lot that goes into that piece, is the hardest piece to overcome in trading. Trust me, I was there 3 years ago. My trading psychology was all over the place, and my account reflected that. I had no mentor, I had no community, I had no trading plan. And with all those things, trading becomes very, very difficult. So, I'm impassioned. I love teaching. I love doing what I do. And that's why I'm going to be reaching out, and I've made connections, teaching this for free at some of the local high schools to be able to give back and give kids the opportunity to learn another stream of income, because we do not know where the world is going to be in the next 5, 10, or 15 years with the job markets, with labor, with AI. So we have to make sure that we teach our kids and that they are prepared. I was so excited to see one of our community members mention that they are having their 19-year-old son in college join our group because he realizes that he needs to better prepare his son for the world. And again, the way the economy is today, you need to have multiple streams of income, whether that's just making an extra $100 a month in trading. That can help you pay a particular bill. But had you never gone into trading, you never would have had that extra $100. So again, it's what I'm doing to give back, to get as many people on the train to learn this for themselves, but do it the right way with an honest and realistic growth chart. No one can sustain 1, 2, 3, 4, 5% gains each and every day. I don't care how big your account is, without risking the whole bucket. If you want to say, there's a right way to grow a small trading account and grow it to a large trading account with less risk and less stress, right? So again, those are all the topics that we are covering inside of our group. So again, if you're not there yet, I welcome you to come in, take advantage of the 7-day free trial, join us and see if you get some value. And the worst case is you say, no, this is not for me. And you just hit that little cancel button before the end of your 7 days. You didn't pay 1 penny, you got some value, and then you move on. But I'm extremely proud that our retention rate has been over 92%. And again, just love working with our community. We just eclipsed 200 members in just a little bit than 6 months. And so I'm extremely proud for that. A lot of those have just been by referrals. I don't do paid advertising. I don't do multiple platforms because I just want to be able to give it back and just keep it simple. And my trading is the KISS method. Keep it simple, stupid. And that works in trading. Too many people complicate trading with 30,000 indicators and too much flashy editing and videos. Trading is very simple. It's the trading psychology that's the hardest part. Okay, thanks for watching. I hope to see you inside of our members group. And if not, I still wish you massive success. I hope you'll continue to follow on YouTube. You'll get value at least once a week from me here on YouTube. But in the community, it's every day. Have a great week. And again, thank you to the men and women of our United States Armed Forces. We are free and we can do this because of you. Have a great trading week.